Hey everyone, John Henry here, and today in the market psychology video, whoa, did somebody say echo? Echo, right? Look at this chart. The S&P looks exactly like what we saw yesterday on the crude oil market psychology video, and it had the exact same reaction. Now, if you don't know what I'm talking about, make sure to go back and watch the market psychology video from the 2nd of May, yesterday, so you can see exactly what we're talking about. But we had this beautiful cycle off of the exact same thing. If you haven't seen it yet, you can go back and you can look at the crude oil chart and look at this exact same pattern. You don't get very many of these, right? Double bounce off of that little prior month close, an immediate drop lower. That is something huge that we need to be paying attention to, especially starting off a new month of May and seeing the exact same pattern in the S&P. We open up a big gap down. Then we start off with a doji, right? Now, nobody really likes trading off of a doji because it's pretty much a range. You buy low, you sell high, and you assume that all the breakouts are going to fail. The problem is the buyers who are trying to fade this breakout to the downside and buying up here, if they're not paying attention, they don't know that they're buying directly into the prior month close, the same level that we saw crude oil respect so well yesterday. And then we get an immediate turn down. Buyers were triggered in by one tick and then quickly shut down. No buyer in their right mind who bought above that is going to stay in that trade, and they're going to exit underneath there. And that is a perfect place for us to get in and drive that move lower, allowing the market to drop, knowing that buyers are getting stuck in that move and likely going to get stopped out. And you can see exactly where they got stopped out with that huge bear candle. Now, anybody who missed that drive lower right there definitely started selling there. And if they missed that, then they're waiting for a little bit of a retracement. They don't want to sell all the way down here anymore because it's probably a little too exhausted. So we want to see the market come back a little bit, right? We see the buyers bounce up, and put this in context, right? We haven't even come back to the moving average, let alone anything else. In a massive drop lower, it's very likely that you're going to see a continued move back down again. But all the sellers up here want to take some profit off the table, right? They're up 2, 3, 4 to 1. They're going to take some money off the table. It just kind of makes sense. And then you see a little bit of a bounce. We come back up, very weak bull candle at the top there, and immediately shut down with a heavily bearish candle. No wick on the top, no wick on the bottom. Immediate selling pressure from beginning to end. And that is a very strong clue that sellers are getting reacclimated in this move, and they're looking to drive that down to the low of day. And that is another opportunity to drop that right back down into those targets, and they just hit them down here again, and now we're back to the lows. So again, really just kind of a copy paste of what we saw yesterday on crude oil, but just phenomenally interesting how well these levels can line up. And when it comes to a new month, you always want to kind of be careful around those monthly levels, just like at the end of the month. Those monthly levels can be interesting, but the fact that it copy pasted almost exactly what happened on crude oil with the same results, definitely very interesting. And you can tell a lot of people saw what happened yesterday on crude oil. If they missed it, they didn't miss it today, and we got that beautiful drive down. So hopefully you learned something, hopefully you found it interesting, and we'll see you next time.